Investing in the stock markets is just like buying fruits or vegetables. Let me explain. Think about a situation where you go to the market and you buy just one fruit, let's say a mango for example, and you go home and it turns out that the mango is rotten and completely spoiled. It would completely ruin your experience, wouldn't it? Well, what do you do to avoid such situations? Very simply, all you do is instead of buying just a single fruit, instead of buying just a single mango, you end up buying a dozen of mangoes or multiple fruits. Because in that case, even if one or two mangoes turn out to be rotten, you have the other mangoes left aside which you can eat and which will be very tasty. Similarly to this, to invest in the stock markets, we have something called mutual funds. And using mutual funds, you can invest in a basket of stocks at the same time. But before we get into the benefits, let us quickly understand what a mutual fund is. A mutual fund is simply a financial vehicle that pulls in all the investments from different investors such as you or me and takes it to a fund manager who is a professional at managing your investments, and he is the one who will manage your investments and invests into different assets like stocks and bonds. Let us now take a look at all the various benefits that you can get from mutual funds. The first benefit of mutual funds is liquidity. Liquidity means the control you have on purchasing or selling an asset. And if you're facing troubles or issues while purchasing or selling an asset, that means the asset is illiquid. Mutual funds provide you the opportunity to buy and redeem or sell your units at any point of time in the future, thereby making mutual funds a very liquid asset. The second benefit of investing in mutual funds is diversification. Just like we discussed in the previous example of fruit baskets, mutual funds are very similar to those fruit baskets and thereby provides you an opportunity to invest in multiple stocks but by using just one instrument. And it lowers your risk as well. The third benefit of investing in a mutual fund is professional management. For managing mutual funds, there is a professional fund manager who is in charge of managing the thousands of crores of rupees of investments that you or me put in that mutual fund. And this fund manager has an expertise about the stock markets and has an experience of a long time. This reduces not only your risk, but this also reduces your effort and time in finding those top stocks. Instead, the fund manager does it for you. The fourth benefit of investing in mutual funds is the low minimum investment required. Let's say there is a guy called Viransh. Viransh earns about 50,000 rupees per month as a salary. Out of this 50,000 rupees, Viransh wants to invest about 2,000 rupees every month. The most favorable way of investing for Viransh would be something called an SIP. Under the systematic investment plan, Viransh gets the opportunity to invest in a mutual fund every single month with just rupees 500 every month. And this rupees 500 will provide him access to a diversified portfolio which will lower his risk. The fifth benefit of investing in mutual funds is that you can invest in tax-saving instruments as well. Now, if you are taking up the old tax regime, you can save up to rupees 1.5 lakhs every single year if you invest in special types of mutual funds called ELSS mutual funds, which simply mean equity-linked savings schemes. These are special types of funds that are assigned by the government to provide you tax-saving benefits. So, not only does mutual fund give you the benefit of diversification, professional management, and low risk, it actually gives you a benefit of tax saving as well. Let me tell you clearly, under the new tax regime that has been started by the government, there are no exemptions available for mutual fund investments. Now that you know about all the benefits of the mutual fund and what a mutual fund actually is, don't jump right away to invest all your money into a single mutual fund. There are multiple kinds of mutual funds which are suited for different individuals. So you could have different risk levels, different risk appetites, and according to your risk appetite, you can choose the funds you want to invest in. But regardless of whatever fund you take, all these benefits of mutual funds will be available to you. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.